This is the Bank Nifty daily charts. As you can see, what was like a potential upward trend for the last few days has been sort of met with and sort of almost spinning top candle on top, right? So there's a sign of confusion. That's kind of where the market is currently. But before I get into our plan for tomorrow, this is what happened on Friday. 15-minute chart. So on Friday, the first thing happened is the market opened up at 37,944, 200 points over previous day's closing, which was 37,771. Straddle closed at 1240 and opened up at 1222. Now, this is for the 7th October. We're not trading for 30th September, we're trading for 7th October. That's why the straddle prices are like that. The first candle itself technically took out the previous resistance. So technically this is out of here, and what we wanted to do was to wait and see it breaks it and what actually ends up happening. Now it broke it, and immediately what was would be considered a reversal candle kicked in and the market started following down. So what we wanted to do was try and establish between where the market was and our next support, which was around 37,400, around 600 point range. Where can potential supports or resistance be created? So one of the things that we were looking at was this. We were looking at the previous week's high and closing, right? So previous week's high around 38,100. So similar here, it was the resistance. The next one we were looking at whether it was closed previously, which is here around 37,900 or so, correct. So this was the closing, so around the 37,900 mark. The other resistance we were also trying to keep an eye out on was previous days high and close. So this was another resistance that we were trying to create, right? So this was previous days high. So we were looking at that, and we were looking at all sorts of variations from where the market was swinging. So one of the other places that I was looking at was this area, which is 37,500, right? You saw this 15-minute candles here taken, and then there was this upward trend that kicked in. So we were keeping an eye on these levels. What ended up happening is the high didn't sort of, it broke, the resistance technically is out, but the high is something that we're keeping around the 38,100. Now around the last week's high, previous day's high is kind of where we were looking at, will it break, and therefore then look at 38,100. And essentially that's kind of how we traded for most of the day. It was lucky for us that it stayed very, very range bound, so we ended up getting some premium decay. So what started off as 1222 ended up closing at 11040. So there was obviously some premium decay that we received. But one of the things that we are noticing is in the option chain is something I'm still trying to figure out. Around 1040, the calls were written at 38,000. 1040 is around this range. Calls were written at 38,000, puts were written at 38,000 as well, and 37,000. So I'm assuming there were lots of straddles written. But what ends up happening is it stays like this in spite of the market coming down. Now, even at say 140 or so, right? So I'm assuming this candle 150 or so calls markets around 37,700, 800 levels. Calls again written at 38,000, which is fine. Puts were written at 37,000 and 38,000. So puts went behind, but 38,000s didn't sort of close. Either they are also playing, or a lot of people are playing the straddle game, putting it at the money and getting the premium decay and moving forward. So option chain is giving us kind of mixed signals, which has essentially been the theme for the last few days. Now, if I look at plan for tomorrow, this is what's interesting, right? We've got a potential upward trend. We have another what is sort of a U pattern, right, or V pattern, and we've got these two at potentials highs tweaking at more or less the same. So if you've got these two as highs, can they be a retracement? Another thing that I'm also keeping an eye on is the 10-day moving, sorry, 20-day moving average. 20-day moving average is around 36,900, whereas market is 37,800. So almost 1,000 points, and every time there's 1,000 point range like this, the market tends to correct, right? Even here, market started correcting. So again, we've got a slightly delta negative position going in for tomorrow. Um, our plans are to kind of see where the market opens, what happens over there, what happens to these levels. Now, these levels are not as, this level is not as important as this level, right, where the week's high is, right? So 38 100 is definitely looking like a high. The closing of this week and high of this week was again 38 100, but I would think even this level would be interesting, which is 37 760 or so. There might be some resistance here. I'll have that checked and marked. Um, so we've got one resistance here. And on the support side, I think 37 400, 37 500 are looking like levels that can be sort of tested for tomorrow. And our overall plan is to wait, watch, see what happens. If it starts breaking this and our slightly delta negative position ends up becoming more negative, we'll eventually either switch our strategies, maybe add a put in the money to adjust, or start cutting positions and moving them backwards. Either ways, like always, we have to keep ourselves flexible, making sure we understand what the market is doing. We may have a slight delta negative position going into tomorrow, but if the market's not respecting our current sort of thoughts and plans, we need to adjust to make sure that we end the week in profit.